Hey, good morning. This is Vance Williams out of Seattle, Washington. This is my first broadcast in a long time. It's Tuesday, April 12th. Just to give you a little background, after 11 years, I retired from Forex trading about 6 months ago. I wanted to pursue psychology, neuroscience, and life coaching. But before I did that, I wrote a book that captures most of my 11 years of experience. You can get that at forexartofwar.com. It's free. You don't have to enter an email or anything. Just click the yellow banner at forexartofwar.com and you'll have it right then. For our team that's tuning in, I'm not going to take questions today because I'm just not set up for that. We'll maybe get to that tomorrow. I just need to put a little mechanism in place. Getting to the story, which others call fundamental sentiment. When we left off in our story last week, expectations had fallen for a rate hike in the US this year, but at the same time, members of the Fed were speaking more upbeat about the US economy. Keep in mind that Yellen, her main job as the chair of the Fed is to maintain stability and avoid deflation. And I'll be talking more about that and later on, not today, but in future sessions. But because of this focus on stability, this is why even if the US dollar were clearly stronger than any other currency in the world, which it is, it won't just keep going up. So this is something that we have to keep in mind, this interdependence relationship. This bank is invested in Japan and in Europe and what have you. We're all interconnected. There is no more high impact data today that I think is meaningful. In commodities, gold has continued to climb, reaching for the March high of around 1270. That might be showing us a little bit of risk aversion strategy, just a little bit, but I don't think so. I think it's just people investing in gold, thinking it's going to climb by a little bit over time. Oil remains in a 3-month range, holding at about $40 a barrel. Before we look at price, I just want to review a few basics. First, we need a read on the story, also referred to as sentiment. When we go to approach the market, the story is always ongoing, and once in a while there's a change. Interestingly, there hasn't been much of a change in this entire year so far, the first quarter. There are rumblings out there this past weekend that markets like Japan and the UK are doing better. And talk on the street is about investments, and that's as opposed to some crisis in the world. Okay, so looking at price, take a quick look at the pound. The pound had some inflationary reports that showed a little bit of an uptick in inflation. One of the things that you'll see in my book is I talk about London sentiment. About 40% of all of the trades executed in the Forex market are out of London. So it's a significant hub. And so one of the things that we'll do is we'll look at what have they been doing since the market opened. And as you see here this morning, we've got London opening at about 3, moving up. Let's get ruler instead. Moved up about 100 and then moved down 100. Now, you'll notice this is a 30-minute chart. This is the 21 and 55 EMAs. They basically measure the balance of money that is available to be invested or traded this week. There's a certain amount of money that's long-term, some in gold, some in companies, what have you. And then traders and investors have a certain amount of money that's available to move over 2 days, 10 days, 2 weeks. And this is what this monitors. It monitors that balance of buyers to sellers on the short-range money. Excuse me. And so we can see the balance is to the top side right now, and it looks like this this level is going to be in question right there. So you're automatically, I say automatically, I'm going to go ahead and use that word. You're automatically taking more risk if you're trading against this balance of money. Now, there are exceptions, and you'll see those in my work over time. Could you sell here? Yes, you could. But the balance of the money is committed to the top side, so your risk would be a little bit higher. Okay, moving over to the euro dollar. You can see that price was in a range. It temporarily went up here, then back down. This makes this void. Moves over here. Let's stretch this over. Oh, missed it. So price goes up again. And what time was that? That was London going up. London went up about 50 and then down 84. So now one of the things, sorry, hang on just a second. No, frog in my throat this morning. Let me have a little sip of coffee here. Now, one of the things I would be looking at is this range. You see they slipped up here for a little bit, up here for about the same amount of time, about 2 hours, and then back down here. So I think this range is relevant, and you can see there's a bottom defined right here where the buyers and the sellers reach 50-50 on this, almost a trend change right here to the downside, and they turned it around. And so we're close to that area right now. Now, as this being clearly identified as a range, I would create a demand line right here that connects to this point and this point. There are very specific rules for doing this. And this would show you where the 50-50 line is likely to be for buyers and sellers. Now, when you get a 30-minute candle close below that, that's significant. It's showing that something has changed. And so this would have been potentially a place to look for a trade right here with a potential target potential of about 17. Okay, so now should we do it now? Let's take a look. First of all, know that this is the last 50-50 market here, and we're almost there. We're only 3 pips away. So, you know, 2 pips, there's 2 pips of variation in just Forex feeds all around the world. So that's pretty close. Now I'm gonna drop down to the 5-minute. And what I'm looking for, one of the things that I would like is right here, when I see a change, a close below, that's where I might look for a trade. Now, when you see this dip all the way down here and use up, in other words, you show an advantage, a seller's advantage, and then a lot of that potential is used up, in this case, 17 pips, I tend to lose interest. But in my book, Forex Legacy, you'll see that I would have given you guys the opportunity to pull a fib right here and then look for a pullback anywhere in here. And if you'd have traded that pullback at 50% with your stop just above this line, you would have just ticked in on a 1-to-1 trade right there. So you see that price will almost always push to the 50-50 resolution level on the 5-minute. You'll see that over and over again. Now, this change is still in effect. So yes, you could have popped in a trade when it gets close to this line, but the risk is enhanced because one of the patterns that you'll observe over and over again is that when there's an advantage and prices move, in other words, there's a change in right here, an advantage for the sellers in this change, price will likely make a push. Then there will be a pullback, and then the pattern that we see repeated over and over again is that it will push again. And where will it push again? It will typically push again very close to this 5-minute candle reconciliation level. By reconciliation level, I'm talking about during a 5-minute period, where did the buyers and sellers reach 50-50 buying and selling interest? And that's right here. You can see it just ticked below that. But this is looking like it's going to continue to drop, and we might see a further move. But given this level here, let's go back out to the 30-minute. I wouldn't want to look for a trade unless we break this level. So looking for the same thing, but breaking that level. Now, you'll see me popping around to different currencies. I'm just looking to see what. But I don't really trade any of these others, and I'll tell you why. Cross pairs, it's kind of all bets are off. U.S. dollar, Swiss franc almost wiped out brokers doing manipulation. We don't touch that one. U.S. dollar, yen, we don't touch that one. Also, extreme amounts of surprise manipulation by the Bank of Japan. U.S. dollar Canadian is strongly correlated with oil. So if oil is on a steady rise or a steady drop, the Canadian will be following it because rising oil is good for the Canadian economy. Falling oil is bad for the Canadian economy. But we'll watch that. We practice with the Australian USD, New Zealand USD, but the reason why we don't trade those with live accounts is because you have to think of it like this. The euro, the dollar, and the pound are about 70% of all the money in Forex. And so when you pair up the Australian dollar with the US dollar, you're pairing up about 40% of Forex liquidity with about 4% of Forex liquidity. So it just becomes a different animal. Also, the Australian dollar and Kiwi are very closely correlated with commodity movement. So you got to have a little bit more skill to trade these for sure. But I like the euro dollar and pound dollar because they're more consistent. And if you just think of someone with behavior, if their behavior is more consistent, then they're going to be more predictable. Do they like peanuts in their chocolate peanut butter yogurt? You would know. You would know if you hung out with them. They go to the yogurt store. Bob's probably going to put peanuts on his yogurt. But so the more consistent, this is all about people and their behavior. So if you want to be right more often than you're wrong, then you need to know the behavior of the people. Time of day is a factor. I trade the U.S. Open for the first few hours. So the same people are there all the time. Very different people, very different culture, very different beliefs, very different behaviors from maybe people in the afternoon here in the U.S. who are trading in Asia and in Singapore, right? Those are different people. They're going to have different behaviors. So this is all in my book, Forex Legacy. If you guys, it's free, so these are the things that you need to know if you want to master reading the market. All right, so you'll hear these things from me from time to time. We'll cover all of them. So as you can see, that euro's taking a bit of a drop. Seller saw this change. You see, we just changed over in the trend. Now the trend point, let's double check that. See if we've actually got, where's my ruler? Yeah, we had a cross on the previous candle right here. So we just had a trend turnover, but you're going to have orders sitting in here. This is just the way it works, where buyers who've been rewarded on these uptrends are going to see that there's likely to be orders here, and there's going to be buy orders. And you can see they jumped in a little bit early. They said, that's pretty obvious. So they put their orders a little bit higher. Now the sellers are in command, and so they're pushing against it. So what's got to happen in order for this to drop a little bit further? Today's sellers have to overtake the buy orders that are sitting here. And sometimes they do, and sometimes they don't. All right, I don't have a pause button on this live broadcast. When we do our live sessions just with the team, the last 6 months or so, however long, I guess it's been probably a year since we've done a broadcast, but I usually pause it. I can't pause right now, so let me see if there's anything else I can cover. All right, let me cover the basics of what we're doing as currency traders. What I'm doing, I should say. And, what I'm doing is, I have a lot of experience, a lot of knowledge, and developed a lot of tools that you're going to see. You can't copy exactly what I do. You have to work your way up to what I do. Now, what I'm looking for is an advantage. And you'll see me looking for a change, right? And then I look at the strength of that advantage, and then can I manage the risk? That's it. That's the three things I'm looking for. And you'll see this. You'll be like, are you getting in when this candle closes? That depends. I have a ton of experience, right? If we were to put this into an algorithm, represented maybe with some algebraic symbols, there would probably be somewhere around 100 to 150 different symbols that were dynamic. At the time of day, then that would dynamically change the risk associated with a stop, entry, or exit, right? So, but this is what I'm looking for: an advantage, strength of that advantage, and can I manage the risk well? And so let's take a look at this and watch that play out. So here's the advantage right here. Sellers create an advantage. I'm looking for, you see this? Looking for a change, right? So you see we're about to have a trend change. We see a change right there. I drop down to the 5 minute, I see the close below this level. Could wait for a second, but if I see that close, that's a change. It's a small close up, so I'd want the stop higher. So I would probably get in right at this line, put the stop up in here, and target about 10, and that would have been a no-brainer. And you guys will see me do this. If you follow the morning sessions, you'll see me popping these trades in. Now, that said, in order to get up and swing at a major league pitch, you've got to spend some time in the batting cage. And in my book, you'll see me give you training wheels. And what the training wheels are is they're symbols of what I see, right? Because when I look at the chart and I see what I see different information than you. If you're really new, you're going to be seeing a stair-step pattern. You're going to be seeing a bearish engulfing candle. You're going to be taking symbols that you learned, and you're going to be projecting what you learned onto the screen in front of you. I don't see that. I just see the information that's in front of you. But you have to walk before you can run, or crawl before you can walk. And so you have to start with the symbols, and then as you gain experience, you see the meaning behind the symbols, which is the human behavior. All right, so as you can see, the sellers just pushed down into that level that I have marked, and they picked up buyers right at the level. Now, we've got about, let me look at the time. You'll hear me talking about time too. We've got 25 seconds for the sellers to push below this level. And always make sure that you're not moving counter trend. You can see we just switched over to the downside. So we're looking for a close. Now, the 30-minute candle close would be better, but if you wait for the 30, very often price will just shoot on down. Because if you think about it here, if we zoom out, let me just reset this. If you think about it here, there's a certain amount of buyers that kept pushing this up, and probably some of them are still positioned in the buy, but their stops are right here. Let me just show you where their stops are. Their stops are right in here, and they usually have them just a little bit lower. They go, well, I don't want my stop taken off if it just dips below. So there's a bunch of stops. So what will happen is when it dips in here, you'll see it move very fast. Boom, 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 boom. And that's not sellers. That's just these buyers getting their stops hit here. So as you can see, the buyers keep pushing right here. There are just orders and interest right in that area, and right where I had that mark, they're just holding right there. Let me get a sip of coffee while you guys look at that. All right, so I'm watching. You can see the buyers are pushing up again. If I look at the clock, we're about 1 minute and 50 seconds left on this candle close. So far, the buyers are pushing hard. You see, we did have a little bit of a close below this level. That could be cause to move, but again, we've got that level right there. Again, that's looking out on the 30-minute. That's saying, hey, in the big picture here, this is where the bigger money held it right here. And so that's going to entice a lot of orders in this area. So we need to see them change something here. Let's see what we've got on the 5-minute going back in time and see if we need to adjust that line just a little bit. I'm seeing where the 5-minute body's close. So it's very close. It's right there. So we could adjust that up just a hair if we wanted to. And so now, let me reset the 5. Now we see that a close below this level would represent a change on a 5-minute period. I just noticed that viewers are coming in and coming out. You can start at the beginning. I covered a lot of content. So it doesn't look like anything's going to shake up. Let's go over the pound. You can see that there's basically an even amount of buyers and sellers right now in this area. Where would we look for the possibility of a trade? Well, I wouldn't look for anything right in here. I would look for a change right above this level right here, showing that, because right here, remember the sellers pushed it back down here, so you're going to be going up against sellers all through here, increasing your risk. But if you got to change right here, then there's a new advantage on the part of the buyers, and then you can look at something there and say to yourself, is it strong enough? Can I manage the risk? That sort of thing. And I will take trades in front of you guys, in real time here. I think I'm about 17 for 20 out of in the first quarter. So you guys will just see me do it in real time, and I've done it that way for 6 years. I'm totally comfortable with you seeing my choices before we know the outcome, and also I suggest you do that too. If you're learning to trade somewhere in public, we obviously have our own forums, but somewhere in public, get yourself held accountable. As soon as you take the trade, post a picture, show your logic, your reasoning, and don't post it afterwards, because your tendency will be to change it or not post it if you lose. And the point is that you need to be comfortable with who you are and what you know, not what you imagine yourself to be. And so you take a trade, take a picture, post it in front of everybody, and say, this is what I know, this is what I did. And then you'll get good feedback based upon what you know, not based upon, something you posted afterwards, which may be partly imaginary. This is a bigger deal than you might know. So I caution you about that. And you want to do that for about, if you were taking 2 or 3 trades a week, you want to do that for about 80 trades. Every time you take 10 trades, review, make sure you write down all the rules you're using to take a trade. Do not change any rules during a series of trades, and be slow to change a rule. You don't change rules just because you lose 4 out of 10. You have to change your rules based upon what is sound logic and good risk management. Now we see the sellers are starting to push here. We've got about 6 or 7 minutes left. I'll keep going here. We'll hang in there for that time and see if they close below here. We've got plenty of time left in terms of the 5-minute candle. There's about 2.5 minutes left. The reason I shifted over to broadcasting the sessions is I have continued to work with our team. I was doing a lot of training for a long time, and so we have a lot of members. And so I told them that, even though I was moving off into a new career path, I would continue to be here Tuesday, Wednesday, and Thursday morning. And I think for a long time I was just really tired from that, with 2 little boys and doing all that. But after doing it for many months, I've realized I enjoy it. So I'm thinking about opening up supervised training by me once again. I haven't done that yet, but I'm thinking about doing it. So one of the things I wanted to do is to open up all of our private session, which there are hundreds of them we've had, but go ahead and do that public like I'm doing this right now, so you guys can see the skill level and what we do. And also my second reason for doing that is when I record them, then I have to edit them, then I have to upload them, then I have to post them, and all of that stuff. Here, I just stream it live in real time, and Google does that all for me. So I've known about that for a long time. I just kept these things private. So why am I giving away the farm on a live session? Well, because you're seeing the advanced stuff. I don't keep anything from anyone. You got my free book that outlines 11 years. You can watch me trade in real time and see what I do. But just like anything real in life, if you want to get good at it, you have to practice the right things, and it really helps if you have someone say, oops, stop that, or here, add this, or yeah, you did that well, but you need this little change. So what I'm currently doing is I'm currently coaching, doing live coaching. It's called live coaching because I'm not actually a licensed therapist, but I have a lot of skills in that area. But who I specifically work with, I work with mostly overachievers who have achieved extraordinary success, and then things just stop working. You know, for some reason now they're getting sick and things are falling apart, and their determination, all their skills, all their wisdom are letting them down, and they're not sure why. And that's when I work with them and say, well, you know what? I went through that, and here's what you need to do. And it works 100% of the time. Now, look at that, guys. Look at how you're going to see this a lot. Look at how that 5-minute candle closed right on our line, saying, we're not sure. So they're right there. So one of the things that happens when it closes right on the line is very often before this next 5-minute candle closes, it'll fire down here, pick up these stops, and then, you know, it's like, you know, I don't want to jump on a moving bus. So I want to see the advantage and get in a good place, not see an advantage as the bus leaving the station. So, you know, kind of keep that in mind as well. All right, so that leaves us with the last 3.5 minutes. We could drop, now this would be riskier, but we could drop down to the 1 minute, and we could see where that level is, and we could see it's still held right at it. So you see, that's exactly what I just told you was likely to happen. It came down, it started hitting, I guess the stops were a little bit higher, just started hitting these stops, and again, it's moved. Now let's see how strong that move is. The move from here to here is about 24. So what we could do, and it's got a little bit of hyper volatility going on right now. A lot of excitement there all of a sudden as it hits stops and buy orders. Okay, the buyers are jumping back in again. Okay, so this is where we could take a pullback at 38.2 or higher. I'm not going to do that because that's not the way I trade. But our members just got picked up at 38.2, some of them, and they're probably looking for, let's see. Now, they probably wouldn't go in at 38.2 because they want to get their stop just above here. And they probably go in at 50%, which puts them at a 10 pip stop. And then they would be aiming for a 10 pip target right around here at 113.63. So let's see if the sellers can push that to 113.63 right there again. Let's drop down to the 1 minute so it's not so confusing. We can see where price actually moved. So there would be a stop probably right here. And keep in mind that that order hasn't been picked up yet. It's got to reach right here. Oh, hang on. Don't have my line. It did pull back to 38.2, but then in that 1 minute it came back down here. It doesn't look to me like it's going to do it, but here's a good point. There's a couple of points in here. Now, notice that this did pull back to 38.2 and made a little bit of a second push. You could probably ignore that a little bit. But here's the thing. Should you go in at 38.2? If you do, then if you want a safe stop, then it's got to be all the way up here, about 13 pips. And what that does is that pushes your target. Let's do it here. That pushes your target, 13, all the way down here, forcing your target to be executed for a bigger gain, and you don't want that. So you need to get a better price in order to get into this trade. And let's move this up just a little bit. Move this up just a little bit. So I always teach the traders to target 0.75 to 1 or 1 to 1 on their targets, because there's a couple reasons for that. One is you're going to win a lot more often while having good risk management, and two, it's really easy. You know, it's just really easy to calculate and do that. And you know, if you think about it, if you're going for 1 to 1, whether you get 8 pips or 100 pips, you make the same amount of money. And so, you know, that's something to consider there. All right, so we're coming in at the last minute here. I'm not sure if we're going to get a push. I mean, most of this move down here were stops being hit. These were stops. Boom, 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 boom. Those were stops right in that area. All right, let me, while you're watching that, let me just show you the website real quick. I'm going to be, I haven't really updated this site much in a long time, but as you can see, there's some very old post here from December 2nd, 2015. And then before that, September 2015. So the team wasn't doing a lot for the public back then, but here's the book. And if you click on it, you'll see no email requirement. There it is. You got my book. That's 11 years of experience all wrapped into one book. So again, that's forexartofwar.com, and you can get the free book there. All right, so we got a clear pullback to 38.2 on the 1 minute here. Let's drop out to the 5 now. Very fast move. The only time I drop down to the 1 minute, and let me explain this real quickly, and we'll wrap on this. When I'm dropping to 5 minutes, and especially 1 minute, I am not using a 5 minute chart or a 1 minute chart. I guess when you think about the candle closes, I am using a 5 minute. But in particular, when I go out to go into the 1 minute, I'm not trading a 1 minute chart. All I'm doing is zooming in. If you just imagine yourself flying over in a helicopter and you're at 5,000 feet and you're trying to see what's going on, you just see a bunch of people move around. They look like ants. You need to go down closer to the ground to see what they're doing, right? And so that's what I'm doing when I zoom in. All right, so I showed you potentially where there's an entry, but you need a better price. Since it did push down, pull back, and push again, in that context, I'd probably want a little bit better price, maybe up in here, maybe get this stop up here, maybe move this target up here. Again, it's all about advantage, strength of advantage, and managing the risk. And what I'm saying is that after it makes a second push, it's more likely to move back higher. This gets your stop a little safer, gets your target a little bit closer. So it makes everything, your entry and your target, easier to reach, your stop less easy to reach. All right, so let me find the system. Okay, so that concludes our first session. Hope you enjoyed it. Again, get to reading my book. I will put a mechanism in place so that you can ask me questions live as we're going along. If you have a question or a topic you want me to cover during tomorrow's session or any session, you can email me at vancewilliams@myself.com. vancewilliams@myself.com. And with that, you guys have a great one.